Buy on the rumor, sell on the news. You've heard that line for years, on CNBC, on trading floors, even around the kitchen table. It feels like common sense, but almost no one ever asks the obvious question: where did it come from? Because this rule wasn't born on Wall Street, and it didn't come from any modern economist. Its roots go back 2 centuries, to a war that reshaped Europe, and to a family name people still whisper with equal parts respect and suspicion. And the way this rule first played out challenges everything we assume about how markets work. And here's where things get strange. In the early 1800s, information moved at the pace of a horse. No phones, no telegraph, no wire services. A market could rise or collapse long before the truth ever reached it. Picture Europe in 1810. Muddy roads, couriers fighting weather, ships delayed by storms. Traders waited days, sometimes weeks, for a single update. Today, markets react in milliseconds. Back then, silence was the norm. And that silence created opportunity. Because while governments accepted the delay, one family did not. They built their own web of couriers, faster than officials, faster than armies. And that decision would change everything. But this network wasn't built for speed alone. And that's where
a fracturing of the systems we once thought unbreakable.
Across Europe, the 5 Rothschild brothers built something no government had. A private information lifeline linking Frankfurt, London, Paris, Vienna, and Naples. Picture the scene. Couriers on horseback leaving before dawn, agents waiting at ports, coded letters hidden in coat linings. While officials relied on slow official channels, this family moved news across borders with startling speed. It wasn't glamorous, it was efficient, and it gave them an edge few understood. But the real power of this network wouldn't reveal itself until Europe went to war. By 1815, Europe held its breath. Everything hinged on a single battlefield: Waterloo. In London's bond market, traders watched British government debt rise and fall with every rumor. If Britain lost, those bonds would collapse. Fortunes, banks, even governments could go under overnight. Picture the scene. Crowded exchange halls, ink-stained ledgers, men whispering fragments of news from the front. No one knew what was true. But one man would learn the real outcome before anyone else, and that secret would set the stage for what came next. Nathan Rothschild was standing on the London docks when his courier arrived, mud-soaked, exhausted, carrying a sealed note from the continent. Nathan opened it, read a single line, and understood instantly what it meant. Hours later, the British cabinet was still in the dark. He didn't cheer. He didn't rush to buy bonds. He did nothing that a rational investor was expected to do. Instead, he folded the letter, slipped it into his coat, and walked toward the exchange with a calm that unsettled the men around him. They watched his face for clues. He gave them none. That silence was its own message. And this is where the story takes a turn most people get wrong. Because what Nathan did next wasn't impulsive. It was deliberate. And it would send a signal through London that no one was prepared for. The next morning, Nathan walked into the London Exchange with the same composure he showed on the docks. Traders watched him closely. They always did. When Rothschild moved, markets moved. He stepped to his usual broker and quietly sold a block of British bonds. For a moment, the floor froze. Selling? On the eve of decisive news from the front? Whispers spread. Pens scratched. Men glanced at one another, waiting for someone to explain what they were seeing. In a world built on rumors, this was the loudest signal imaginable. And it worked. Panic hit the room. Prices plunged. The expectation was simple. If Nathan Rothschild was selling, Britain must be losing. But why would a man who knows good news is coming act like disaster is guaranteed? That question would haunt every trader in the building and set the stage for what came next. Word of Rothschild's sales spread through the exchange like a spark on dry timber. Within minutes, brokers were rushing across the floor, shouting prices, waving slips, trying to unload their own holdings before the collapse they were now certain was coming. Outside, the panic spilled into the streets. Small investors crowded around newspaper offices, begging for updates. Shopkeepers whispered that the government must have suffered a disaster. London didn't have confirmation, just a signal. And for most people, that signal was enough. Because in markets, then and now, fear moves faster than facts. Contrast the calm logic of waiting for official news with the raw emotion that overtook the city. Rational judgment gave way to instinct. If Rothschild was selling, they had to sell too. No one wanted to be the last one holding paper that might soon be worthless. Prices tumbled. The air thickened with urgency, pens scratching, boots pounding, voices cracking as bids fell through the floor. And when everyone else was selling, Nathan quietly moved to phase 2. What he did next wouldn't look dramatic, but it would change the entire game. While the exchange unraveled around him, Nathan didn't join the frenzy. He moved with quiet purpose, stepping aside with his broker and issuing a simple instruction: buy. Not a whisper of hesitation, no performance, just steady accumulation at prices crushed by panic. Picture the floor. Men shouting, ink smearing across ledgers, clerks stumbling over one another to sell whatever they could. And in the middle of it, one man doing the exact opposite of the crowd. This wasn't luck. It wasn't theater. And it certainly wasn't the dramatic legend some people now tell. It was disciplined execution, taking advantage of a market reacting to fear, not facts. Contrast the mob's desperation with Rothschild's stillness. The before and after of a market in free fall versus a buyer working through the wreckage. As prices kept dropping, his agents quietly expanded the buying, sweeping up bonds that hours earlier had been far out of reach. But here's the part almost nobody tells correctly. This wasn't the end of the play. It was only the setup for something larger.
Was intentionally obscured from the public record.
As the chaos settled, a clearer picture emerged. Nathan hadn't performed a miracle. He had followed a rhythm the market always hints at but rarely admits. Prices move on expectations, not outcomes. Waterloo was just the backdrop. The real force shaping the market was human behavior. Contrast the traders clinging to rumors with the one man acting on what those rumors would do to prices. This wasn't a one-time trick. It was a pattern. Quiet, repeatable, and still very much alive. And this pattern still drives the markets you invest in today. The deeper truth behind Waterloo is that Nathan wasn't reacting to the battle. He was reacting to what the rumors about the battle would do to prices. Step 1. Rumor creates value before facts ever appear. Picture a crowded exchange hall, men trading on half-heard whispers, on letters that may or may not be genuine. Markets move long before certainty shows up. But rumors aren't stable. They create the next problem. Step 2. Fear outruns truth. When doubt hits, rational thinking collapses. In 1815, fear pushed prices faster than any courier could bring real information. And the same impulse still drives sell-offs today. And that leads to the most powerful part. Step 3. News always arrives too late. By the time the official word reaches the public, the market has already moved, already priced, already shifted to the next expectation. Rothschild didn't invent this pattern. He simply recognized it earlier than everyone else. This rule did not die in 1815. In fact, it became even more important in the modern market. Step 4. Smart money trades expectations, not events. Walk through a modern bond desk. Analysts running models, hedge fund teams pricing scenarios, algorithms shifting positions before headlines even break. They aren't reacting to news. They're front-running what they think the news will mean. Contrast that with the old exchange floors of 1815. Ink and candles instead of screens and code. Different tools, same instinct. And if you think this is old history, look at what's happening now. Step 5. Retail always reacts last. Most investors move only after the story hits TV, after the shock is priced in. It's why anyone over 40 has watched the same cycle repeat, again and again. And that brings us to the part that truly matters today. 2 centuries later, the mechanics haven't changed, only the screens have. Before a CPI report even hits the wire, futures jump on whispers and positioning. A single hint in a Fed speech, tone, not policy, can push billions across the market. Corporate earnings, often priced in weeks before the numbers are released. Contrast the speed of today's systems with the same old human reactions: anticipation, fear, and the rush to get ahead of everyone else. What began on muddy roads now plays out in milliseconds. Different era, same behavior. So what does all this mean for you, the investor watching this right now? In today's market, you're not competing with headlines, you're competing with expectations. By the time the news reaches you, the move has already happened. Prices shift on sentiment, on forecasts, on the quiet positioning that builds long before anything becomes official. The danger isn't being wrong, it's being late. Contrast waiting for certainty with those who act on how the crowd will react to uncertainty. To navigate this landscape, you have to read expectations the way others read news. And that brings us to the next question: where this pattern leads next. In the end, buy on the rumor, sell on the news isn't just a market rule. It's a reminder that power flows to those who move before certainty arrives. Most people think markets are driven by hard facts, but the truth is they're shaped by whoever controls expectation. And in a world of rising prices and constant uncertainty, that imbalance still defines the economy you live in. But this is only one piece of the larger structure. The next chapter tells a different story. An empire built not on information, but on monopoly itself. Click here to watch the Rockefeller episode.